ECM, Richard Zhu from Intel Capital, Ruma from 500 Startups, and William Balby from Singtel Innovate. Okay, good. We planned that out right, just enough chairs to go around. Let's bring up the extra mic from the audience. Where is the extra mic from the audience? Okay, did somebody eat it? Where's the extra mic from the audience? Okay, yeah, please bring it up. Okay, thank you. That's maybe over on the side. All right, great. Now we'll get started. We got that all settled, straightened out. And again, warm up your questions, so we want to make this more interactive toward the end of the session as well. And do you agree with some of the things that you heard from the investment banking side and the legal side? Do you agree with some of the assessments that they had of the market?
Sure, I can go first. Yeah, I think one lesson that we've seen over the last, through the ups and downs, you have hot markets, you have tough markets, but when you're raising funds, sort of a step-by-step process. So sometimes it doesn't make sense to take too much money, too high a valuation. But generally speaking, I recommend companies to take as much money as they can get, because there's a rainy day around the corner.
Okay.
I think when competition is so fierce right now, I definitely agree with Mr. Chen that they need to take a lot of capital to just win and race through.
Yeah, I think overall I agree with the concept that you should take as much money because cash is basically the lifeline of any startup. However, I would caution that what's more important than actually just cash is that entrepreneurs should think about who they're getting money from and what value the investors offer other than just cash. Because I think at the end of the day, you're going to have to spend the next, 3 to 7 years with these people. And you're going to have to trust these people. You're going to have to like these people. Personally, you may not like them, from a financial perspective, but at least you have to get along with these people and consider what they can offer you aside from cash, because I think that's the most important aspect of it.
I think it's really case by case, depends on which kind of industry, which kind of business are you in. But in general, I think, particularly here in China, I think you do have to immediate 100 competitors. You have to outperform others. Otherwise, even you getting bigger, but even they are moving quicker than you, you actually getting smaller. So money really is a power here.
I was just going to say I agree with Rich about how it really matters a lot who your investor is going to be. For us, we don't have the pressure, we don't have too much money apparently like all the other investors here, so we don't have pressure to deploy capital. We only pretty much invest in very fixed amounts. But we would definitely encourage our companies in their follow-on rounds of financing that they look for a combination, maximizing both the type of investor as well as their valuation. So.
I've been hearing lately a lot about the tech bubble. Do you think we're in a tech bubble now, or are we, and where are we in that cycle, or are we on the verge of a tech revolution with all these new innovations coming up in so many fields? Tech bubble or tech revolution?
I would say at the very, very early stage, angel stage, during which we invest, there isn't so much of a bubble, but that's just because we're looking at companies with so little traction, like 6 months typically, that's, you can't have like really crazy variances in valuation. But there has been some more outlier cases that I've seen. And I think in China also, like the way I describe it is China's a little more of a scatter plot versus in the US, it's very much like a very standard deviation, like normal distribution of valuations, right? But in China, it's a little bit like all over the place. So, I mean, is it a bubble, or is there just not enough data points for you to really sort of see trends? I don't know.
Sure. So I'm also sitting at the early stage. So in the U.S. a couple of years ago, you might see 21 billion in VC and 18 billion in angel. And in China, it's sort of like depends on which numbers you're using, but 5-10 billion in VC, but like 1 billion in angel. So there's been a dearth of capital at the early stage. The great thing is it's changing now. There's more and more sort of super angel funds coming up and supporting the early stage. But it's still, I'd say in the early stage, there's not a bubble. The late stage, there's perhaps been a bubble. It's a little bit more rational now, but it's there's still a lot more competition at the later stage than there is the early.
I think if we look at some of the data that we see, 2 years ago, our angel investments, the average valuation would be around 2 or 3 million. Recently, it's been 5 million, sometimes like 10 million for really strong teams. And at the Series A, some of our companies, 3 of our Series A's have gotten close to $100 million, which is unbelievable. I'm trying to convince Ramon to give a term sheet to one of them, actually. But yeah, in terms of price inflation, we're seeing that. But if we're talking about a bubble like 99 and a crash, I personally do not believe that we're there yet at all. I was looking at some data a few months ago, and in 99, you had a few, like 300 some companies go public, and last year it was 30 something. The price to sales multiples would be 25x, whereas now it's 7. The time to IPO would be 2 years, and now it's still 7. So so I think we're not really at that crash stage at all.
My short answer is I don't think it's a bubble, because we can look at the public side and the private side. If you look at the public side, I think the public market actually, China tech stock actually shrink a lot in the past months. As we've been through the IPO process, we saw how difficult it is. It's not going to be I wouldn't say it's a bubble. Meanwhile, if you look at compared with 5 years ago, you do see the Chinese company market cap is becoming much bigger than 5 years ago. 5 years ago, you're talking about a mediocre public company, you're probably talking about 300 million. Today, you saw a lot of the billion company, you saw 500 million companies like threshold for all the recently public listed US company. I think the real reason behind that is really because the monetization model and opportunity are much more mature in China today. 5 years ago, you're talking about Chinese company, you're thinking about, well, huge user base, but small revenue numbers. But today, China already become the #1 e-commerce company in the world, and the gaming keep picking up, and also service that also kick in. I think advertisement sector also actually slower, but still also growing very quickly. So, today we're talking about the China, public listed companies. Their revenue capability to generate reasonable revenue is much stronger than the company 5 years ago, which translated to much higher, market capital company. So I think although in general we saw the public listed Chinese company getting bigger, but it can be justified by its revenue size and by its growth rate. On the private side, I think, on the private side, because public can transfer to private side, all the investors still think there are potential 10x return opportunities, so you got to put money in. I think it's a little bit overheated recently. We saw all the private sectors, all the deals become much more expensive, but I still don't think it's bubble.
Yeah, I mean, from my perspective, it's only a bubble if you don't meet expectations, right? People are investing in these companies at very high valuations because of the anticipation of the massive growth that they're seeing in these companies and the economy here. So if you believe that these companies are going to continue to grow, and the economy in China is going to continue to expand, people are going to move online, and consumption is going to continue to go up, it's not really a bubble per se. Now you may be paying more expensive valuations, but you've got something here, right? I mean, these things are not going to diminish to zero. And that's on the public side. I think on the private side, what you're saying is actually, higher valuations that's being driven by, the higher valuations on the public side, obviously, and what you'll get over time is actually a diminished return for the investors. And I don't think that's a great thing in the long run. But at the same time, we're more worried about whether these companies can continue to execute their business plans and continue to drive growth and push toward that public exit. At the valuations that you may invest in as a later stage investor, you may get 5 times to 8 times your investment versus what you would expect of 10 to 12 times or something like that. But you're going to make money, and as long as you're returning capital, I think everyone's happy. So, is there a bubble? I'm not too worried about it. It's just a matter of how much you're paying, and you may be overpaying a little bit, or you may not be. But that's like trying to predict is the Chinese economy going to grow at 7.5% or 7%. Hey, a lot of smart people out there and still making those guesses.
So we're not too concerned about a bubble. We really don't think there is a bubble. That's the conclusion I'm getting from this. But let me ask you, we've seen this trend of made in China, invented in China, innovated in China. Do you really think that China has a chance to win the tech race globally? China already has the world's largest internet and mobile communications market.
Yeah, I mean, I certainly think there is. I've been investing in China since 2004, and I've seen the various kind of phases of what's kind of happened in the market over here. And I would say in the last 2 to 3 years, I've seen more innovation happen than I have in the previous times since I've been here. Right? And I think that's kind of been driven a lot by the fact that, rightly or wrongly, I kind of attribute this back to the Groupon phenomenon, right? I think up until about 3 years ago, everyone was trying to basically copy what was happening in Silicon Valley, and especially on the internet side of the world. And what's happened is that when the Groupon thing happened, everyone decided that I could be the next Groupon in China, and all of a sudden there's like 3,000 to 5,000 Groupons out there, and no one's making money, right? And I think from that experience, the entrepreneurs here have basically said, oh God, maybe I need to do something different. Maybe I need to create IP. I got to do something that someone can't copy quite as easily. And that's kind of been, to me at least, that's kind of been the turning point when we kind of started seeing companies that are saying, okay, we're no longer just the XYZ of China. We're doing something innovative that's going to be servicing the Chinese market in a very unique way, because the Chinese market is actually developing in a very different way than the market is in the rest of the world. And I've also seen real core technology being developed here as well. So we've kind of come across some really interesting stuff on the technology side, as well as the fact that a lot of the hardware that's actually being manufactured is actually, there's a fantastic ecosystem of the ability of Chinese entrepreneurs to kind of go and integrate hardware and software. And I think that's going to be a next big trend. But anyhow, the short answer to this is yes. I think China in the next 5 to 10 years has the ability to kind of create some innovative companies that's going to create some really interesting services that you're not going to see anywhere else.
So the focus of our fund is actually taking China innovation and bringing it to Southeast Asia. So we have 500 million mobile users in Southeast Asia and Africa. China is probably the largest mobile-only, mobile-first market in the world. The innovations here are actually more applicable to Southeast Asia, Eastern Europe, and South America than anything coming out of the U.S. or Europe. So that's, and we're seeing good results. So earlier, my last one was at SoftBank. We did a U.S. copy of Shanda Game Card. So the game card model in China, we took it to the U.S. We sold it to Visa for $180 million. Now we're seeing a lot of the companies here actually going, instead of being clones, going directly into Southeast Asia, going directly into Eastern Europe.
Ron, what's your view on this question?
Probably, I wouldn't strongly say China going to win the innovation competition in the next 5 years. But we do split different models compared to what in the US. And on the mobile side, on the gaming side, we also saw a lot of interesting innovation. For sure, we keep seeing a lot of the innovations on the hardware sectors, particularly in all those consumer devices. Yeah, I think the whole situation is improving. That's my observation.
It's interesting, a couple of you mentioned hardware deals. Hardware was kind of not mentioned too much a couple of years ago. What is it about hardware that makes it so hot right now?
Well, I guess I could. We've invested in a couple of hardware deals, but I mean, especially as it relates to China, it's just everything is manufactured here. Like, or a handful of hardware portfolio companies, I think with the exception of one, all of them manufacture here, right? Either here, like in Shenzhen, Dongguan, whatever, or actually one is doing some high-end manufacturing in Taipei. But, well, everything now is smart, right? So it's the chips or whatever, or screens, whatever you want to call it, like they're so cheap now that everyone expects everything to be connected. So therefore, you know, I've been pitched everything from smart alarm clocks, wall plugs, right? Like I think everyone in this room probably has as well. And there's this expectation that going forward, consumers will want to be able to control everything from their devices. So, and with China, we're actually, as Rich was saying earlier, I am probably very recent discovery of the hardware ecosystem, but yeah, like I also recently discovered that, wow, actually a lot of these things that you see on Kickstarter and you think like are really amazing, there are some like variants that are already being done in China and are being done by these hardware manufacturers that aren't very smart about marketing their product, but actually have really good functionality and sometimes exceptionally good design.
Yeah, I wouldn't say hardware is hot. I mean, you're seeing kind of a resurgence of interest in investing in hardware, but I think
It's not a bubble either, right?
No, hey, that's why we love it. But I mean, hardware is hard. You know, I mean, hard, difficult to do. You know, it's yeah, okay, bad fun. But hardware is difficult to do to some extent, right? And I think what we're seeing is that this new wave of kind of quote-unquote hardware is actually more hardware, software integration that's built in with a service of some sort. And I would actually kind of say that's kind of more the direction it's going, rather than just pure hardware in terms of making boxes, right?
So, if an entrepreneur came in, walked into your office, or however you met them, what would be kind of your dream deal? The thing that you want, you're just waiting for this right moment, this right investment to happen. What would be your dream deal? Just imaginary, even.
For us, we don't ever look at theme, so we're not theme-based investors. We're not like, I mean, we did pay a little more attention to hardware in the past few months, but for us, it's all about the founder. So, like last week, we had this really smart guy, like PhD from Stanford, and had worked in banking, and had this really awesome team of traders and IT guys in the finance world building a consumer finance product that's ended up being a model of something that's already successful in the US. And I'm super excited about this deal because there is innovation, but it's also a semi-career model in the US, and it's just the founders, the makeup of the team couldn't be stronger. So for us, it's really about the team.
I think for us, we are more thematically oriented, and although, of course, the team is super important, for me personally, I would love to see something like, and I have not seen a good example of this, but something that is like very unsexy, that's kind of our motto, makes a lot of money. We love SaaS models, and I think in China there's a lot of inefficiencies in the manufacturing space. There are about like 5 million small factories in China. There's a ton of inefficiency there. I would love to see software that addresses that issue. And I've been pitched several of the issues, the monetization. But like the reason why I would love to see something like that is number one, SaaS, SMB productivity software is our sweet spot. And number two, I think it does a lot of social good for China, especially us all living here suffering from the environmental pollution. Any sort of cost reduction for factories, if you think about it, is really just conserving resources, which hopefully translates into a cleaner environment.
I mean, we're kind of a weird fish out there because we're strategic investors, so we're strategic and financial. We do Series A to pre-IPO and even PIPE deals. So, in terms of defining what a dream deal is, it's kind of hard because I think every stage has its kind of own definition of a dream deal. But I think overall, what would be a great deal for Intel is something that is really unique and reinvigorates our core markets, right? So something that reinvigorates the growth of the PC market that makes everyone say, oh, I gotta go and buy a new PC, right? Because at the end of the day, that's kind of where we make a lot of our money. I think just in terms of just kind of just large overall big picture, though, I think an ideal deal would be obviously a very strong team addressing a very large market that in a way that people haven't been able to think about doing it before, and being able to kind of protect that that market segment, and that's kind of a pretty boring kind of definition, but I think that's kind of the way we look at the world.
I want to add two quick things. One thing that we really like is someone who solves a pain point, and I think Silicon Valley entrepreneurs tend to convey that really well. They start with what the pain point is and how their product solves it. I think that's really important when giving a pitch. And the second thing is authenticity of the founder. So we really like teams, like we just invested in a Wi-Fi router, with no configuration, and the guy's been in the router space for 7 years, and we just love that he has that experience.
There's a big difference between early stage and late stage. So in the late stage, you've got a big problem, a big market, and hopefully a big company. In the early stage, you should have a big problem, but maybe they have this company has the ability to solve a smaller problem, take an angle on it. If they go directly from startup after a huge problem, there's a good chance that the larger players in the market will squash them. So get a foothold in with a good solution to maybe a smaller problem that can then be extended to solve a much larger problem as the company has a chance to scale up. So it's more of a step-by-step process.
Basically, in DCM, we do most of the deals in Series A or early Series B. So basically, ideal deal in my mind is, first of all, it's going to be a critical enough, big enough market opportunity. This team really address a huge, potentially huge opportunity here, which can create a $1 billion company, if not bigger. The price should be reasonable, and the third thing, I think, most importantly, when we talk with founder, we believe this founder is a strong person, a quick learner, really passionate about their business, and passionate about build a great organization. Basically, in a word, you feel this guy is a guy can go all the way to lead all the investors to the promised land. That's kind of the founders we are looking for.
But what about female founders? Too few and far between, right? But other than that.
Okay, what was your question? Too few and far in between?
Too few and far between female founders.
Yeah, I mean, for us, I think, as Anna was saying, our fund is probably also unique in that we also have a lot of female founders. I think our average is about, portfolio-wide is about 25%. Not necessarily that the female is the CEO or the main, the founder with the most equity, but one of the co-founders. And actually, we recently launched a syndicate on AngelList, and we're supposed to have the first deal later this month featuring showcasing female founders. And we love female founders because actually I was just on a call with one of the hardware female founders that I'm overseeing, and she said something I thought was interesting. She said, you know, there are so few of us that all of us are vetted, that we have gone through so many sort of hoops to get to funding, that even if we're just at seed, we've actually gone through a lot more tests than many of the male founders. I'm just quoting from her. I feel her pain, but I don't know, like there are very few sort of industry stats, I think, to support it. I think, you know, HBS has some studies that it's like 80% or 60% more likely for a male founder to get funding, but no one really knows what the reason is. I do think that, you know, the reason why we like female founders so much is that a lot of them are very, like, collaborative leaders, and also, you know, just the fact that they may see problems very differently, or may see different problems from, you know, your typical male founder. But I would love to hear what the rest of the male investors here have to say.
I'll be honest, I don't really have much of an opinion one way or the other. I mean, I think, you know, we don't exclusively go out and hunt for female founders per se, but at the same time, you know, we obviously give equal consideration and equal opportunity to anyone that comes in. You know, we are actually looking for people with bright ideas, you know, leaders who can help build big companies. So I think, you know, obviously and there's been a lot written in the blogs and the press about this, but I think it's
tried to do is bring in more female executives into the group, serial entrepreneurs, people who've been there, done that. And for a while there, we were almost around a third, although after we opened up Hong Kong, kind of got diluted again. But the idea is that within any team or any group of investors, it's very important to have different perspectives. As a group or as a team, a founding team, you get with more perspectives, you get a lot stronger team. So.
All right, let me change the subject. I don't want to dwell on this one forever, but I had to ask it since we have two female investors up here, which is rather unusual, I think. And I want to ask about a topic that's on a lot of people's minds. What do you think the prospects are for Alibaba's IPO? Is it going to really break open the rest of the China tech market, or not? What do you think its prospects are, and how is it going to impact the rest of the market?
I can't really comment on that one, but there have been impacts. So as an early stage investor before, it's kind of difficult because within each vertical, you might have maybe one or two guys that go public, and they compete against the larger internet firms. And now you might have one or two like security that go public, but each of the larger firms are acquiring maybe one or two of them. So where before you might have a chance, one or two chances to get an exit within a particular vertical, now you have 4 or 5. And I don't know whether the Alibaba IPO is a driver of that, or, but the trend over the last year and a half has been very, very positive for the early stage.
Ramon, you must have a view on this. You've been behind VIP Shop, Tunia, which just went public last week.
I think it's Alibaba has definitely had a huge impact on the market, and the impact China tech and global tech as well. For sure, it's biggest ever in China history. I think probably in terms of the dollar raised, it's bigger than, you know, in the past 15 years, all the U.S. listed China tech combined together with the members. So it definitely has a huge impact there. I think really depends on, I think whether it's good or bad impact, I think really depends on, you know, first a few quarters after the post the IPO, whether they can be the consensus, and it's going to be, has a huge psychological impact for the investor, all the world, so has, you know, how they feel, and how they feel the China tech stock as general, I think.
Yeah, no, I mean, I agree with that. I think the biggest issue here is going to be a matter of expectations. Overall, though, I think it's very positive for the China internet market, the China market. If you just kind of think about, just as a thought exercise, right? I mean, if Alibaba goes public at say 150 to 180 billion dollars, right, and they continue to grow at 30% a year, in 5 years, this could be the largest company in the world by market cap, right? And if the largest market cap in the world is now a Chinese company that's involved in e-commerce, I mean, how much attention is the rest of the market going to get? And I think you're going to see, and you're starting to see some of this as well, as with U.S. public market investors really waking up to the fact that, yes, the Chinese market is huge, and it is a market that is not necessarily accessible to the rest of the internet market in the world. And so you really need to kind of invest in both sides, right? So overall, I think it's actually going to be positive, but like Ramon said, it's really going to depend on what really happens in the first few quarters after they go public and whether they can sustain that pace of growth.
I think that U.S. investors are focused not only on Ali, but for example, we have Jume going public tomorrow, and I think, Jing going down a little, not less for two, but I mean, I think people are looking at the smaller IPOs for that as well.
Just one comment. So you have actually right now and over the next month or two, a lot of Chinese IPOs going. You've got a lot of U.S. tech IPOs actually pushing back and pushing out. So I don't know what that means, but it seems like there's a lot more attention on the China side right now in the U.S. one.
Yeah, it's well on track to surpass what it did last year already this year so far. We're only into May, so it's definitely picked up a lot. And investor sentiment has changed. I think it's changing as well toward China's tech stocks. I'd like to ask you about your opinion on these Chinese tech companies going overseas. Whether you think that's a good strategy, or should they try to own the China market first before going overseas? It seems to be the trend today is that you have to go overseas. It seems that all the leading China tech brands are looking to go global or go into the U.S. Is that a good thing? And would you invest in a company that had that as a strategy from the beginning?
I think it really depends on what the company does, right? I think if the company actually has some core IP that no one else in the world has, then yes, definitely they should try to proliferate that worldwide. And we're starting to see some interesting companies come out with regards to things like cloud computing and like big data and analytics and things like that. But in general, no. I mean, I think in general, most Chinese companies today, most Chinese entrepreneurs, they don't really want to go overseas until they've actually dominated their home market, right? And the market here is large enough that everyone kind of sees the opportunity here. It's kind of like saying, would a Silicon Valley company want to say attack the Chinese market before they have any traction in the U.S. market? And if you went to Silicon Valley, I think any VC investor would say, well, that's kind of a silly idea, unless you're actually going to be based in China and very specifically understand the Chinese environment. And I think for the most part, most Chinese entrepreneurs see the opportunity in China and don't really see the need to really attack the overseas market right off the bat.
I think it's for sure the China market is big enough home market, but we do support the companies, our portfolios, to go pursue the opportunity overseas. And for example, I think probably this is still here. Papaya Mobile day one basically is a global play, and we invest a company named Happy Elements, which is a social gaming company, and transferred to a mobile gaming company today. From day one, they are starting doing their business in basically in Southeast Asia and in Taiwan and in Japan. And I think on the mobile side, especially on the mobile gaming side, you saw a lot of Chinese companies pursue the opportunity overseas, which I think is very natural. And we also invest in a company named uCloud, providing the cloud computing service to the mobile-related company, because their clients go overseas, for example, doing business in Southeast Asia. By nature, they go to that market as well. So I think we do saw a lot of the Chinese companies, including our portfolio companies, aggressively trying to penetrate the overseas market. And it's going to generate a lot of the opportunity for Chinese companies, especially in some space, which particularly competition here is very intense. But overseas market actually is pretty wide open. So it's
不好意思，Chen entrepreneur. These days, people spend a lot more time on the smartphone, especially. So, with this in mind, a few of my friends and I started a mobile game company to target this market. But what happened is, with the international in mind and what we mentioned about globalization these days, we set the stage in Taiwan instead of China. With more targeting international market and cost control or whatnot. But we're having quite a feeling that we're not able to. I mean, VC markets in Taiwan is obviously very small and overly cautious about investing. So my advice, my question for the panelists is whether do you have any advice for companies like us that's based outside but trying to raise funds from Chinese-based venture capital?
I have trouble with this sometimes. So sometimes, especially early stage, yeah, just move.
Yeah,
Where's Beijing?
we invest very regularly in Taiwanese companies, and I would say it's not. I don't think it's going to improve the VC situation there. There's just like not that much capital. So if you need a lot of capital, you should just move. Yeah. Or at least move your main guys here. I think DCM invested in Guodongxing, right? That's a Taiwanese company.
Actually, day one, it's in the Acupass. It's like event brand models. Initially started in Taiwan, so it's through mobile and the web to help people organize great events like today, like this. And originally the team are all based in Taiwan, so when we invested, we cut the deal and moved the whole team here. Two reasons. One reason because personally, I think probably Taiwan's home market, especially for venture-backed, startup, are not big enough. Secondly, probably the whole ecosystem is not there. How you raise next round, how you get qualified talents, how you get generate enough market awareness. Things here just now in Taiwan. So if you really want to go big, please move here.
Okay, on that note, I think we're going to have to wrap it up, and I'm sure our VCs will be hanging around during the reception to answer any of your questions directly. And let's give everyone a round of applause. Our next event is in New York. We're going to take advantage of all those IPOs from China tech companies, so our next event is in New York. We'll be in Shanghai in September. You can check out our schedule on Silicon Dragon Ventures website, and let me know if you have any questions. Okay, let's get a photo up as long as we have all these great VCs here together. Just bear with us one moment while we do this, and then we'll start the reception.